Hey there, beautiful traders. Welcome back to my channel. My name is Desmond Samuel, and I'm back on your screen again for another episode of our weekly Forex Forecast. Now, if you're new to my channel and then you're wondering what this forecast thing is about, so this is, like I always say, just a segment of my YouTube channel where I come on here to give you guys the trading setups for the weeks ahead, and then obviously take you guys down the path and then explain to you guys what has been happening recently across the FX board. All right. So without wasting any much time, we are about to kick into it. However, if you look closely, I'm at probably maybe 15, 14 subscribers away from hitting 1K. And I believe that with this video, you guys can do magic because you guys brought me all the way from 0 to this point. So I strongly believe that you guys have my back, which you always do anyway. But yeah, we are just about to roll the ball over the line, like literally just 14, 15 subscribers left to hit 1K. And I believe that as you watch this video, as you subscribe and as you share, as you comment, YouTube begins to recommend, and then we grow and then hit the 1K at last. Guys, I cannot wait for this. So without wasting any much time, now let's kick into things. Now, the first pair on my list now is a euro dollar. You guys know that I like to start with my favorite. So at the moment, the euro seems to be trending upwards, and we have no other choice but to go with the trend. All right. So if you go from the weekly time frame here, look closely at the weekly time frame. Let's see what's happening. All right. Let's see what's happening. So top down analysis wise, we are actually still very, very bearish. I mean, overall, this is headed south. At the moment, we are actually starting to point to the upside because now we came on here, we put in some form of a head and shoulders pattern, and for some reason we've just been lagging, bouncing in and out of this, this range here, and it's been a very nasty range for a very long time. I'm talking since January, so it's over a year actually to get in one particular range. However, currently now this market seems to be giving us higher lows, and this is pointing medium term bullish. All right, now I'm going to explain this one shortly to you guys by the time we get to the XY. So if you now scale down to the daily time frame and look at things closely from a very careful standpoint, you can see that upon getting to this point here, we had put in, so this is a demand level. Yeah, so this is a demand level, this is also a demand level. However, progressively, if you look again closely, progressively, you can see that we keep making higher lows. So this low is higher than the previous low, and then obviously this is higher than this previous one. So technically, you want to go with the trend at hand, and at this time on the daily time frame, we're actually bullish. So this was a low, swing low, swing high, swing low, swing high, swing low. All right, so this is the characteristic of an uptrend at the moment. So what we should be looking out for here, you can see that when the market was beginning to curl all the way down, it hit this particular base here and then just blew out with a daily bullish engulfing candle. This is significant. All right, and technically speaking, whenever the market takes out the high, whenever it does this, that is it creates the demand level, rallies from there, takes out the high, then now pulls back in. So what tends to happen is that the market tends to come back here and revalidate this base around this 1.0800 region, and then blow all the way and create new highs. You get progressively, it keeps creating new highs, as you can see here, new high created, new high created, new high created. So technically speaking, what I'm personally waiting for is very, very simple. Once you scale down to the 4-hour time frame, I think it's a lot more obvious, So what you need to look out for is allow the market, you see the way we created this base here, allow the market come back and balance properly at this 1.0777 region. I beg your pardon. 1.0777 region is my call, and then once we balance out here and give a decent entry criteria, entry signal, entries are made, stops are below here, and then my take profit moving on for the euro, if and only if this base holds, is 1.10500. You heard it here first. 1.10500. I'm not the kind of guy that likes to call out and bluff about targets. So believe me, if you doubt me, I called out USDJPY, I called out BTC, I called out Ethereum. I've been calling out pairs back to back. All right. So I kid you not when I say that we are definitely heading to 1.10500, because currently now the US is headed into a recession, and you guys know what that means for the dollar. All right. So technically speaking, I'm bullish at the moment, medium term bullish. All right, so targets are 1.10500 for the for the euro dollar, medium term. And then if we do manage to break, I mean, obviously once we get to this bar, I'll be back on your screen as usual, just to let you guys know, give you guys heads up, as to what I'm waiting for and then what you should equally be expecting. So the next pair on my list now is the pound sterling. So GBPUSD on the other hand also has a similar structure to what the euro is doing, because the DXY is actually bearish at the moment because it gave us a double top. All right, so now looking closely here, this is what we have at hand. So this initial balance out and rally that occurred on the pound sterling earlier on, that people caught the buys. However, for some reason I missed it, which is fine, okay, because you're not always going to catch all the moves in the market, believe me. So top down analysis wise, we are actually we have broken out of a downtrend here, a downtrend line actually, and then we came on here to put in some form of a head and shoulders pattern. That this is an inverse head and shoulders pattern, and on the right hand you can see that progressively we keep on making higher lows. All right, so even now scale down to lower time frame and see things clearly from a grand standpoint, you can clearly see that this is what it looks like here. This is a low, this is a high, higher low, higher high. So every single time we take out a high, a previous high, we pull back, we take out the most recent high, and this is what's happening here. We came on here, created this decent base here, all right, took out this high, then we now fold it all the way back down. So the market is actually headed to this 1 point. So actually I have two levels here. I have two levels because of how deep the dollar needs to pull back into. I'm watching these two levels closely. We could actually pause at 1.26000 and rally all the way from here, or we dip lower to 1.25. Then this now turns to liquidity, and then we dip lower to 1.2500, which obviously, like I said earlier, you're going to understand this better once I get to the dollar index. So that's just that for the pound sterling. Nothing much. My primary target is 1.320. Obviously, first level target is always the most recent high. So once you take out the most recent high, we should rally into 1.320. Now, trust me, guys, I've been doing this for well over half a decade. So when I say these things, I'm not bluffing. All right. Believe me, I can see a losing trade from a mile away, and I'm looking at this base carefully. That point where the business, but you're like, pound sterling, cable, feel me. So let's watch this base at 1.2600 carefully, and then let's see. Once we see a decent, you see this. This is a manipulation right here, because this is not ready to blow. Believe me, we need to see the market melts back down and balance properly, just like it did here, before it now blow all the way through the roof. So once again, guys, I'll be back here to let you guys know I go nowhere, guys. This is my business. Next pair now is a pound card. Pound card obviously has a similar structure. We are actually headed up, bullish trend overall. However, like I always say, once we create a demand level, take out the previous high, come back again to test it. All right. So this is what you guys would typically refer to as a fake out. However, this is just the market just giving you heads up that we are actually headed higher. And if you just zoom out a bit and look at higher time frames being the weekly time frame in this scenario, you can clearly see what I'm talking about here. We are actually headed bullish, because this is a low, this is a high, higher low, series of higher lows, right? So this is only headed higher in my own perspective, as you can see clearly. So it will be in your best interest to only look out for buying opportunities, which I expect you to do. So right now, I'm actually waiting for this guy. You can see this base created. Yes, he broke out, retested, and blew all the way through the roof, and then took out his high. So we came back down again to we're coming to balance properly. Once the balance is confirmed, we blow through the roof once again to 1.78526, and subsequently 1.83639. For those of you guys that said I speak very, very fast, this is me speaking with a very calm tone. All right, so I hope you guys can hear me, and I hope you can write down all these price targets I keep calling. First target is 1.78220, which happens to be the recent high. However, before we do that, we have to see this guy come and balance properly. Come and bottom here. Once you bottom here, give us a decent entry, signal, maybe like a 4-hour engulfing or daily engulfing candle, or even counter trend line break, what have you. Just give us a decent entry point. Then we'll obviously be here to make things happen. So next pair now on my list would be the AUDUSD. All right, AUDUSD. Hold on, guys. Let me just get something done. Okay. So AUDUSD, sorry about that. So AUDUSD also has a similar structure. However, for AUDUSD, this guy is gonna drop lower first before we now continue higher. Now I know exactly what I'm saying, which once again I'll show you guys clearly once we get to the dollar index. Just work with me, guys. Just be patient. Now, weekly time frame wise, I had been calling AUDUSD to the upside once because I saw us break through 0.66500, and I was thinking we needed to come and have like a decent retest before rallying all the way. Unknowingly to me, my previous targets, which I kept on calling for you guys, was where the Aussie dollar was actually dropping into, and that was maybe somewhere around 0.64407 to my utmost surprise, because I called out this level. If you guys can recall, vividly, I called it out and then I forgot about it, because I'm not really a big fan of this pair. This pair is very indecisive. It's one of the most stressful pairs that anybody can come across in the FX market. Believe me. So once you scroll over to the daily time frame here, you can see what I'm talking about here. So this is where I'm expecting the market to just kind of like decide where you want to go. All right. So we can see the base here, right? So this is the base, obviously. However, the XY has to pull up, in terms of like pull up. So once the SI pulls up, this guy is gonna drop lower. So once it maybe gets here or somewhere around here before we now blow all the way through the roof. However, I'm cautiously watching this pair. This is not even topmost priority at the moment, although it's amongst the top 5, but it's just not ready. It's just not there yet, and it's quite everywhere. So I'm not really. However, if you're the type that likes to catch trades like this, you could wait for a decent pullback into the 0.66500 region, then take like medium-term shots on this guy. Since you're expecting the euro to drop and the pound to drop lower and the pound to drop lower, you might as well just go short on this. Next pair on my list now is the AUDCHF. AUDCHF try to play mind games with us when we are actually looking for bullish trends. However, the whole trend flipped somewhere around here, so giving us a double top, and which is something very, very decent to work with, because you want to actually pay attention to the higher time frame, right? So once we scale higher to the weekly time frame, you can see clearly here that we had like this guy has been dropping for a while, since 2021, yeah, I guess. Actually, way back, but yeah. So since 2021 here, you can see that we kept on creating lower highs. So this is like a steep trend here. So in my own opinion, I only advise you guys to always consider the trend at hand. And if you look closely here, in this case, this is the trend at hand here. So coming on here, this was kind of like a fake out here, fake out and collapse. So this melted all the way back in. So what you should be looking out for, since this is a double top already, just go down to your daily time frame or the 4-hour time frame, whatever the time frame you like to execute on. So what you should be looking out for is a decent pullback to this blue bar right here, right about 0.58500. Once you see a decent pullback here, we can now drop things all the way to 0.55000, which is obviously where this guy's headed back. For I think the next pair now would be CAT-CHF, because I saw one of my Telegram community members comment about CAT-CHF. By the way, guys, if you want a link to my Telegram community, it is in the description below, and then also feel free to email me if you'd like to enroll for the course or talk to me personally about anything. Follow me on Twitter and Instagram, guys, and also make sure to subscribe, guys. I'm so close to hitting 1K. All right, so right from the weekly time frame, we can see that this guy is headed south overall. This has been a very, very steep downtrend, and we just came on here to create what looks like a head and shoulders pattern. We have the head, shoulder here, and then this was the neckline that got broken. So typically speaking, in price action, once a range has been broken out and has been allowed to drop or move a bit, we should be expecting a decent kind of pullback. All right, so in this case, this is what is going to happen here, and then this is also what you should be looking out for. So wait for the CAT-CHF at 0.64500 region or 0.64780 region around here. Let the market come back and balance well properly, and then you can always, as usual, look for a decent entry opportunity. Maybe the 4-hour candle break and close, counter trend break and close, or maybe an engulfing candle. But this is just a separate level here that you need to consider. So wait for the guy to rally into regions of 0.64830 region, and then look for just wait for the market to act like it wants to drop, then you enter. Right? So I think that makes sense. So something like this, wait for it to give you something like this, or maybe a 4 hour bounce from here, an engulfing red candle bounce from here, then it cannot enter. And then obviously, ride the wave. So the next pair now on my list will be the USD CHF. USD CHF also has a pullback to do. All of the CHF pairs at the moment have like decent pullbacks to give us before we actually come on here to mess things up, right? So for USD CHF, it also has, however, for USD CHF, I want to do this with a different chart entirely. Just hold on, guys. I'm gonna explain to you guys what I mean. Because of the way I like to analyze, I like to have like two different charts open. One I use for my major minor levels in, and then the other one is just to play around the market a bit. So if I use this one in particular, I can see that this is where I ought to be waiting for the USD CHF. Now let me scroll higher to my daily time frame and see what's happening there. So from daily time frame, and you guys gonna be by now that I like to roll with just supply and demand levels. I'm not really a big fan of all of these multi levels we have on here. So you can see a supply level here. Okay, so this is ideally where you want to be waiting for USD CHF, right? So this is that supply level that held here, and I'm sure that if I look left enough, I can see where it has held. So this was like an arc. So this was like a breakout of a support level or demand level, then a retest, minor retest, and then collapse. So we need to see that market pull back into that point to give us that full retest before we continue lower. Obviously, first level target will always be the recent low, and then subsequently we should actually drop all the way to 0.83320. 0.83320, yeah. So that's just there for USD CHF, and this also moves alongside the XY. So you might want to mirror that as well whenever you're trying to do your own analysis. Next pair now would be gold. So gold on the other hand still has some downside to gold. It still has some downside. Forget about all of these shenanigans you're seeing here. We have some downside, and that downside happens to be around 2,284.374 dollars per ounce. All right. So however, we have to clear this bar. Once we clear this bar, the gold balances properly here. So this is where you want to be considering going long on this guy. And then on the other hand, if this guy decides to blow out of here, which is unlikely because this is like a double top here with a lower high from this other high here. So this is actually pointing south. This acting like it wants to drop lower and balance out properly at this previous demand here, and then use it as liquidity. However, in the event, because obviously anything is possible, so in the event that this happens to blow through the roof of this 2,440 dollars per ounce, you should be targeting 2,600 prime target. All right, prime target is 2,600 for this guy. Next pair now on my list now would be silver, and I've been calling silver to the upside for the downside actually for a very long time, and I said to you guys that we have to actually come and find a bottom, a decent bottom on silver before we actually start looking to blow through the roof, and that is exactly what the market has been trying to do at the moment. So the market has been trying to find its own bottom here, and it still has maybe some more downside, like to just probably balance well before we now decide to go higher. So if you go on the weekly time frame, you can clearly see what it looks like here. You have an inverse this pattern, and obviously I had some of you guys try to buy this guy from here. You're not wrong. However, I like to go with a higher time frame narrative, because I have done this for years and years and years. I can tell you for free that most of these levels will have you get burnt. Do you get most of these levels you see inside a range would have you get burnt. Allow the market find its bottom and balance well properly before we now start looking for trading opportunities. So for silver is quite simple. When all is said and done, when there's a decent balance and a decent bottom here, we come in now to look for a counter trend line break. Once we see a decent counter trend line break like so, obviously gold has to do some more. It's almost to the downside. So once we see a decent counter trend line break, allow this guy coil properly and balance well at this $26 per ounce. So once this is done and we see a decent 4-hour engulfing candle break out of the counter trend, and then we can start looking to go long this guy. Prime target is 35 dollars per ounce for silver. Next pair is the S&P 500. Now recently we've had a lot of people panic, because they've been thinking that this guy is gonna collapse further. People losing money, investors panicking here and there. However, these things happen, right? So these things happen. So the market has to pull back. Believe me, the market pulled back here, so it has to pull back, you know. And I do not believe that this is all the pullback we have left. I still envision this guy dropping lower to this base right here. Okay, to this base right about 5,000, you know, basis points for the S&P. So we could definitely drop lower here. And if this level does not hold, we could even drop lower to 4,700 basis points. And then when all that is said and done, because this also balances well with the Fibonacci, don't get me wrong. So when all this is said and done, because I see this as a trap. So and mind you guys, like I said, I've been doing this for years, so I can tell you for free. I know when, you know, a pair is about to play with you. Let me just put it that way. So I need this guy to, you know, break below all of this thing, and also with the recession comes, you know, a deep pullback, or maybe a panic sell off, you know, on the with the stock market. And then also this is like a premium point that you want to be buying from, right? A discount level rather. So 4,600 basis points is decent. However, if market decides to do market stuff and then just decide to blow through the roof from here, I'll just come on here and then put you guys through, and then let you guys know what to do. All right. So for the next pair now on my list would be the DAX index, which is the GR30. So for DAX, we have put in an inverted interest pattern here, which is also the reason as to why I can tell you for free that the S&P is going to dip lower. We have put in the DAX has put in a head and shoulders pattern here. Neckline has been broken out here, as you can see here clearly on a weekly time frame. Now this isn't 4-hour time frame shenanigans. This is on the weekly major time frame. So you guys know that this is solid, yeah. So I'm long story short, I'm actually waiting for the DAX at 16,500 basis points. Once we balance out properly here, I'll then be here to look for long opportunities, like to go long, because this is an inverted head and shoulders pattern, like it or not. And neckline was broken and retested minorly. So we need to see the market come back for further descent pullback, a major pullback, before I actually look, you know, to go long on this guy. So if you bring your fifth, like so, swing low to swing high, you can see how it looks decent. All right, decent. So next pair now on my list will be Nasdaq, because I know a lot of you guys tend to trade this Nasdaq a lot. So let me see. Where did I keep Nasdaq? Oh, okay, all right. I tried to get up. So Nasdaq also has a similar, you know, issue with the S&P. We have so many demand levels acting up at the moment, so it's kind of like tricky. We have one here acting up. We have one that failed. We have one that's acting like it wants to hold. So it's a bit of a 50-50 scenario here for the Nasdaq, because now if I bring my fifth once again from swing low to swing high, you can see that the market came on here and then it looks as if it is reacting off of the 0.5 region. However, you know, technically speaking, from what I'm seeing so far, I do see some more downside on this pair. So if we can get a decent downside, maybe to this 17 or maybe 16,563 basis points here, this would be a decent point to start looking for, you know, bullish opportunities on this pair. However, if market, you know, decides to break into this range here, I'll be here to let you guys know what to do, and then obviously ride the wave, because quite frankly, my target so far will be 23,000 basis points for the Nasdaq. The next pair up on my list now is BTC. So for BTC, I had been highlighting BTC to the downside for a very long time. You guys were here, you saw it. If you doubt me, go back and check my previous videos. I called BTC from 71K right from here. I said it was gonna drop, and it did. He came on here to play games with you guys, and I was like, guys, don't worry. When BTC is ready, I myself will be here to let you guys know. So from the weekly time frame, you can see that we have like a double top here, and then a minor pullback to just maybe shock and shake out the paper hands. Yeah, paper hands. So once you scale over to the daily time frame, you can see that we came on here, gave even another double top here, and then neckline got broken, and then this was the pullback here. So long story short here, go down to the 4-hour time frame, because I think it's actually time. So go down to the 4-hour time frame, wait for a counter trend line break like this, then entries are made, then stops are below here, then you ride this guy all the way down to its prime target, which happens to be $40,000 per coin. I see no reason as to why that should not happen, because this is the bear run. So we should actually, and historically, whenever BTC creates a new high, or whenever it is time for a bull run, the market tends to correct deeply and go deep as per pullback before coin in now, but it's all the way through the roof. All right. So next pair on my list now will be Ethereum. So Ethereum on the other hand now looks like it's about to drop lower, obviously, and we have smashed my first two targets, which the first one was 2009, or rather $2,900 per coin. I will smash that. The second target was 2,192, somewhere around here. We smashed that, and then my last target for this guy is $1,600 per coin, which obviously we will smash that. All right, so once again, this just goes to show that, and listen, I know my onions, and if it doubts me, you can always go back and check my previous outlook. I called out these pairs ever since, and I have lots of my friends on Twitter that made a lots of money from it. All right, so you too can also learn how to do these things by simply subscribing to the channel, guys, and then also coming to my Telegram community. Okay. Next pair now. So just wait for this guy to pull back deeply, and that's why I recommended the use of the counter trend line for BTC, because I feel like we still have a deeper pullback because this guy is here to retest this neckline properly. All right. So once this comes on here to test this $3,000 per coin properly, we should drop lower all the way to $1,600 per coin for Ethereum. And next pair on my list now is oil. So for oil here, it's nothing serious. I called crude oil right from inside of $84 a barrel. I said that we were going to collapse through, all the way to $77 a barrel, and we did. And then we even headed lower and then created a new supply level here. So moving on oil here, I still see more downside. However, I need to see the market come and reject off of this freshly created supply level here, which also lines up with the fibs. And currently, this market is in a downtrend. All right, so we need to see the market pull back into this $79.869 a barrel and balance out properly before we actually drop lower. All right, so first level target, once all criteria are confirmed and checked and all boxes are checked, is $72.398 a barrel, and then subsequently we should drop all the way to $66.874 a barrel. So the next pair on my list now, last pair on my list actually will be the XY. So this is exactly what is happening, and let me just enlarge my screen so you see this clearly for yourself. So for the XY, this is it. All right, so we've been calling the XY to the upside for a very long time. However, one thing I noticed that it was that whenever we tried to even get our momentum to go higher, we kept on creating lower highs. You can see this is a lower high from here, lower high from here. So this is headed south at the moment. Although we have this ascending triangle, ascending trend line to kind of like pay attention to. However, this was a double top moment here. Double top created, neckline broken and retested manually and then dropped. So the market tends to, technically speaking and also historically speaking, the market tends to always go back for a deeper pullback. So this is what is happening right here. So this is why I urge you guys to look for buying opportunities on pound dollar, on euro dollar, on pound card as well. All right, so wait for the market to pull into 104,500. Then also, if your broker allows you to hit the XY, by all means go for it, because this guy had us. In fact, let me just get rid of this this trend line. Oh yeah. So in a recession, the XY tends to fall. All right, so the dollar index tends to fall. So this is what's happening here. Double top created, checked, confirmed, neckline broken, checked, confirmed, retest done, checked, confirmed, then the bigger pullback is now coming. All right, so every single thing is pointing south, and you guys know that when things are pointing south for the DXY, is pointing bullish for silver, pointing bullish for gold, pointing bullish for EURUSD, pointing bullish for pound dollar, pointing bullish for the fiber. Every single pair versus the US dollar always tends to go higher. All right, whenever the dollar is falling. So that is exactly what you guys need to do. And then once again, guys, my name is Desmond Samuel, and make sure that you click the subscribe button, share this video to as many people as possible on your social media platforms. Get me to 1K, guys. You guys can see I come here to give you guys free gems, free drops, free game. So by any means, by every and any legal means possible, please get me to 1K. That's all I ask for. All right. So thank you so much, guys, and I'll see you guys on my next episode of Market Breakdown. Peace out. And once again, my name is Desmond Samuel. Thank you.